you today. Great to see you at this conference. Checked out your booth, checked out your business. It's pretty amazing to see the connection between the traditional finance and Web3 finance. And so I just kind of wanted to talk to you about some of these things. So first of all, let's start with, can you please introduce yourself?
Yeah, no, thanks for giving the opportunity to have this chat with you this afternoon. My name is Khalid. I'm the co-founder and CEO of DK Digital, a fully regulated VAR and ESCA entity here in Dubai. It's actually a subsidiary of our parent, DKK Partners, which head office in London, which started off, which still is a TradFi emerging markets liquidity provider. And really great to talk with you this afternoon about how we've managed to combine the worlds of TradFi and Web3.
Yeah. It's very important for blockchain to really have people come in from, for lack of a better word, from the legacy financial system, and to really build something in Web3 and just to connect the two, because you understand what success is in traditional finance and TradFi. And so to bring that mentality, to bring that kind of thinking and that vision to Web3 and to blockchain, I think is very important. So that's my next question to you is, why blockchain?
Yeah, and look, I don't think legacy is an unfair characterization of traditional finance. I think those in the know and that worked in the industry, which I have done for 20 years, knew that it was creaking at the seams and a change was required. Mainly driven by the market and clients and customers being more demanding when mobile technology, streaming is instantaneous, TV is instantaneous. So why isn't my banking and finance instantaneous? Because it was on legacy infrastructure, right? From that perspective. But one thing that TradFi does bring to the Web3 sphere, which I think is very much here to stay and be the fabric of the financial service industry, they know how to scale. They know how to be around for 100 years, 200 years, right? From that perspective, that's their strength.
Yeah.
That's their genius, right? They may not be the best innovators in the world, they may not be the most creative, but they build factories that basically churn out product day in, day out. And I think, look, given the opportunity, and look, we fell into this by accident, right? Let me be honest with you. We were serving corporates in Africa that were importing goods and services from the Far East. And we got presented with an invoice in USDT. We were a little bit clueless going, what is USDT, right? And then we found out that the new adoption of translating value through stablecoins using the blockchain really was to essentially provide an alternative to a very archaic traditional finance Western world dominated Swift infrastructure, right?
Yep. Yeah.
And look, and having worked in an American bank for 10 years of my life, you don't really think about it too much, right? Because that's what you're used to.
Yeah.
But when you move to the EM geographies, you realize, wow, you're taking 5-6 days to settle here. That's harming, that's hurting you in terms of your working capital cycle, in terms of your financing. So therefore, necessity is the mother of invention. And therefore, we stumbled across the fact that, hang on a minute, bringing across our traditional finance know-how, knowing how traditional rails work. As I say, an espresso machine can make you tea, right? Just don't put the capsule in. It dispenses hot water. So that's how we came about.
Yeah, you touched at a very important point. I think that a lot of people that live in developed countries take infrastructure like this for granted. I myself, having quite a bit of experience working in developing economies, have a different perspective of that from working in developing economies. And what you just described is something that you constantly run into in developing economies. They try to leapfrog, but you can't really leapfrog by building $1 billion infrastructure to catch up. A lot of times you need to have that, extra edge. And so I think that's important for blockchain to kind of fill that.
Yeah, look, 100%. I think, in the traditional finance centralized world, you really had little or no control in the way you transacted. In the DeFi Web3 world, the onus is now back on the remitter or the individual that wants to, instead of being the spoke in the wheel, they're now the hub, right? Now, there's some challenges associated with that. from an AML compliance KYC perspective, we're no fools. We understand that there are certain conditions that need to be met. But in the way of allowing the transmission and translation of value across infrastructure, that, let's face it, there are going to be some institutions in emerging markets that will never ever fit the appetite to get a dollar nostro. That's not going to happen.
Absolutely.
But to have a USDT nostro allows you then participate in global traditional capital markets finance. A little bit like mobile phone technology that basically is far superior in emerging markets in the Western world because we were so dependent on fixed line technology, right?
Yeah.
So I can see the same thing happening with the caveat that the traditional finance, reg tech, and compliance rules need to be blended in together.
Yeah. No, I definitely agree with you that we're set in our ways in a lot of developed economy infrastructure usability and use in general. And so, it is difficult sometimes versus a developing economy that understands the problem and you give them a solution, they look at it, they say, well, wait a second, this is a way for us to actually kind of level up. And so that's, I wholeheartedly agree with you. And actually working myself in these economies, developed economies, I feel that, and I'm sure you do as well, that sometimes a developed economy is going to be much harder to persuade to kind of broaden their thinking than a developing economy would.
No, look, and we've seen the practical example of this is with digital assets regulation, right? You look at the countries that have embraced and got their statutes, their laws, and also the regulations in place compared to the developer. Look, I mean, Mika only got created, I think, 18 months ago on offshore ESMA, and they're still trying to scratch their heads on what's going on. The FCA are still, trying to work out how to integrate it into the more traditional economy and financial system. So that's why I think the more developed world countries are going to struggle, because so much clear water has now been put between them and the developing economies in the paradigm of new age finance. You're going to get a shift, I think, in the economic activity. Now, the only thing where the developed economies can basically take some comfort, they're still heavily capitalized. A lot of the capital sits with the major financial centers, but capital is provided by people and companies. It's only a matter of time when they start shifting their resources to more agile economies and agile, traditional, non-traditional finance systems to really create value.
Yeah, I mean, you already see that. I mean, just if you, outside of the Web3 space and the regulations that we're talking about for digital assets, just in general, economies, like Singapore, like the UAE, like even Seychelles have made it clearer for companies that are looking to get into this particular line of business or this area of business. So that's why I have this influx of companies coming to the UAE, for example, because the UAE is just kind of thinking, okay, what can we do to attract this business in an orderly, kind of regulated, clear way? And I really think that's the point that you just made, it's very, very important, that I think that developed economies should really try to kind of not act like the 900-pound gorilla.
Yeah, I mean, look, necessity is the mother of invention, right, at the end of the day. And look, if you've been set in your way, look, I think the new Trump administration has recognized that, to be honest with you, and seeing one of the policies that I think is very encouraging is talking to the SEC and getting them to accept a lot more of the digital asset world, integrate in traditional finance. I think it can only come from places like there. But yeah, I mean, you look at Europe, you look at the UK, unfortunately, they're still going to be set in their ways until they realize that no one's listing with them anymore.
Yeah,
right.
Yeah,
and that's where. But I think that'll be too late.
Left behind. That's basically what's going to happen. They're going to be left behind if they're not innovative with this. Absolutely. So let me shift the conversation a little bit more specifically to blockchain and in particular to Cardano, because we're here representing Cardano and the Cardano ecosystem. And so a business like yours is, like I said, I really kind of appreciate that you come from the TradeFi world. You have all of that experience. You understand what success looks like over there. You understand what responsibility, what viability looks like over there. You bring that thinking to Web3. You're utilizing blockchain. And so first of all, what is your impression or perception of Cardano when you are working within this field?
Yeah, look, I think they are an incredibly agile, innovative player, right? I think they're someone that provides a very easy way of translating value across their ecosystem, point to point, accessibility, um, the neutrality, depending whether you have a balance of $10 as opposed to $1 million, is agnostic from that perspective. They're non-judgmental, and as we know how judgmental credit institutions are towards companies and individuals based on their income rather than their potential. And I think essentially it allows, a bit like Web3, transmitters of value to manage their own content, right? At the end
Yeah.
of the day, and manage their own flow and manage their own point to point destination. I think I see blockchain, I draw the analogy to schemes, right? We've had Visa, MasterCard for years.
Yeah.
They're a scheme. No different from blockchain. They're another scheme. They just happen to translate digital assets across that,
Yeah.
whether it be currency or whether it be Bitcoin, USD to USDC. I can't be more supportive of initiatives like this to really start to give people choice. We have choice in the way we shop. We have choice in the way we choose our TV programming. We have choice to price shop how we fly. Why don't we have choice in the way we manage our finances?
Yeah, absolutely, absolutely. I again, I wholeheartedly agree with you on that. And again, having built a business around Cardano and blockchain in general, that really kind of really resonates with me. So what I would actually like to pivot more towards right now is business viability, and this is what very much interests me as a as a businessman myself, as a participant in this in Cardano and the blockchain movement. And so again, I already said this many times. I appreciate what you bring to the blockchain ecosystem. So what does that what is business viability to you within the Web3 space? What makes the business viable? What makes the business successful? And what does that translate into?
Yeah, I think, look, I don't think we can take the full credit of where we are today and what we've achieved. I think it's come out of a market need, the need for speed, the need for efficiency, and the need for control. And I'm talking about our clients here. I'm talking about our customers that want to run their businesses, want to manage their working capital cycles a lot better, manage their tight margins. And I think in the economies that we work in, born out of necessity, they're looking for alternatives. Our job is to basically demonstrate their alternatives, show that the alternatives are scalable, but most of all robust and to be trusted.
Yeah.
Our business is a trust business at the end of the day. It's a relationship business. Yes, we may move money in the ether through various methods, but at the end of the day, it's a person receiving money from another person. It's a liability being settled from another person. So as long as the trust equation is met in parallel with the control and the access, it's limitless, right? In terms of what you can do.
Absolutely. Absolutely. The potential is really there. And it's all about how we, as businesses, harness that potential.
Yeah, for sure.
Yeah.
I agree.
And so before we wrap things up, I wanted to finish off with this question. What do you think in the blockchain in the blockchain context? What do you think mass adoption will look like for blockchain if we succeed in what we're doing?
Well, I call it the McDonald's test, right? where you can go into a Starbucks, a Tim Hortons, a fast food outlet, pay for your shopping at a point of sale, and allow you to pay with any method you want, whether it's fiat, whether it's digital, etc. It's sitting alongside your Visa, your MasterCard too. I fear for those guys, right, at the end of the day, because the tide's coming. It's just how wet you want to get, right?
Yeah.
So for me, mass adoption is paying your children's school fees, paying your council. I even joked to one of the guys here, we're going to be at GITEX next year when it's going to be an expo. I know they're going to rebrand. We'll pay our invoice in stablecoin. That's going to go via a blockchain.
Yeah.
That's mass adoption for me.
Yeah.
You don't even think about it. You just do it.
Yeah. I love that you said that. You know, I always, that is really the bottom line for me. You don't think about it, you just do it, and it does what it's supposed to. It's under the hood. You don't have to know anything about it except for it does what it needed to do.
Exactly.
Yeah. Well, thank you so much for spending some time with me here and discussing these things that, well, frankly, I think are paradigm shifting.
No, look, thank you for giving me the opportunity to share my views with you. Really enjoyed having this chat. And look, let the revolution continue to make things better for everyone.
Absolutely.
Thank you.
Thanks a lot.
Cheers.
Thank you.